Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is a brand new week, April 24th. We are going to dip back into the banking sector. There have been some recent pullbacks. We know that the banking sector has had some issues, and we are going to take a look at another Warren Buffett approved stock here, Bank of America, big piece of his portfolio. And in all full disclosure, it is the one of the top three in my portfolio as well. So let's jump right in. And this is my investing criteria, what I'm looking for on a high level to see if a company is worth doing a deeper dive. You can run through this, pause it here, and go through. The only difference is down at the bottom must be 4 of 7, but I add a price to book for financials. If it's a financial company, this last one would apply. If it is not, then it would not, right? It must meet 5 of 8 if it's a financial, must meet 4 of 7 if it is not. Back to Bank of America. Now, who are these guys, right? Bank of America, they are a bank, just like any other bank. They offer personal banking, small business, wealth management, business institutions, right? Credit cards. So they are your typical bank, right? You can go get a savings account, checking account with them. If you own a small business or a large business, you can do your banking with them there, right? Obviously, they offer a lot of loan services, mortgages, car loans, that sort of thing. So typical things that banks offer. www.bankofamerica.com. You can check them out if you want to know more about them. And we are talking about Bank of America, ticker BAC, out of the financial sector, down 0.37% on the day, closed out the day at $29.76, so under $30. Nice to see them back under 30 again. That's where I've been buying them recently. 52-week range as low as $26.32, as high as $38.75. Average volume 59.9 million. Today's was 27. Real volatile day. You can see that volatility there. Market cap of 237.26 billion. Beta is not listed. That is a little strange. PE ratio is low, but we do not really use these. You'll see I actually added price to book. Price to book for financials is what you want to look at in lieu of price to earnings. Earnings per share, EPS, is sitting at $3.33. Their next earnings date will be July 18th, and their forward dividend is 88 cents. They are a quarterly payer, so divide by 4. We will see that here in a minute. And they have a nice dividend yield, 2.95% dividend yield. Ex-dividend date, their last one was March 2nd. And according to Yahoo Finance, where I pulled this information, they have a one-year target estimate of $36.54. Now, as I say, you want to get in here and do a little deeper dive if you are interested in these. So I pulled a little bit of information out of them. Under the statistics tab, if you go all the way down, you'll find this little area here, dividends and splits. What we're looking at here is the 5-year dividend yield, 2.17, and their current dividend yield, 2.95, or this we'll call it their forward annual dividend yield. It's their current, right? It matches 2.95. And what you're looking for, this is for dividend yield theory. If the 5-year average is less than the current or forward-looking dividend, then it speaks to some undervaluation. If this number was lower than the 5-year average, it would speak to some overvaluation. On this same tab in statistics, you'll find price to book right up at the top. Anything under 1 is in fair value, or at least that's what the old rule goes. So you can see their 2023 0.93 and their current 0.97. Looks like they were just above 1 there for most of 2022 and have dipped back down under a 1. So speaks to both the dividend yield theory and price to book, speaks to potential undervaluation. And another one, if you go into financials, you'll find a lot of information there. Balance sheet, income statement. Under the free cash flow tab, you'll find free cash flow. They pay their dividends out of free cash flow. So you want to see growing free cash flow over time. For most companies, this is going to be a little wonky. Banks, again, have some different things that they can do to make it look like they're losing money. They have some things they can pay down or write off debts, bad loans, for example. So you can see here, 2019, it looks like 61.7 million, 37.9 in the negative. So if I was looking at this for a regular company, that would not be good. For this one, I'm not as worried, and we'll see that in a minute. You'll actually see that their free cash flow, even though it looks like it's negative, we'll see their payout ratio is low, right? But then another one, a little extra one I like to throw in is the repurchase of capital stock. They are repurchasing stock over time. So that makes you even if you don't add anything, let's say you throw $1,000 into it a day and just let it go, as they repurchase stock, you will own more and more of the business over time. So that's nice as an investor. Now, Yahoo Finance was the first source. I always recommend more than one source. So stockanalysis.com is another one that I like. I'm not affiliated with that one either. And they have 19 stock analysts that have taken a look at this. They call it a consensus buy, though it is right there on the edge of a hold. Apologize. My sinuses are kicking my butt lately. My voice probably sounds a little funky today too, but you know all the flowers and stuff are blooming around us, so it's really killing me. Anyways, back into the video. They have a low estimate of $29, right? It's right up against that lowest estimate. That would be a 2.55% decline from where it currently sits. They have a average estimate of $39.14. That would be a 31.52% increase in the stock price. And if it happened to hit their high estimate of $55, that would be an 84.81% increase in the stock price. All the while, you could collect that dividend along the way. Now, this is where I show you my position. I am long in Bank of America, right? I do have 350.376 shares. I have $11,917 into the position. I am down 12.51%. So my current position is worth $10,420. This is one I have been averaging down in. My cost base is at $34.01. And I will probably continue to, as long as it stays under $30 here, I will probably continue to average down on this one as long as it stays under 30, and I can continue to bring this cost basis down. Now, as we said earlier, they are a quarterly payer. They pay out 22 cents per share. Low payout ratio, 26.8% payout ratio. So very low. Lots of room to increase that dividend if they want, or pay down debt, whatever they want to do with that. And dividend growth is nice, 7.41%. So that is really Bank of America. That is it. Let me know down in the comment section down below. Is this in your portfolio? What do you think of Bank of America? Are you avoiding banks altogether right now with the issues around the banking industry, right? We just had a couple that went bankrupt, so I completely get it if you're just avoiding those altogether. I think that really had more to do with the regional banks than these larger banks. And some of these larger banks, I think, will benefit from people pulling their money out of regional banks out of fear and dumping them into these larger banks. But that's just my opinion. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button and join me on this journey to financial freedom. Join the vested interest community. Hopefully, you're on your own journey as well. There is a Webull link down below. If you use that to sign up for your brokerage account, you'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. But dropping a comment down below, let me know what you think of the videos. That is a way you can help out and do all that other stuff. Like I said, the thumbs up, subscribe, hit that notification bell so you're notified whenever we post any new content. That all helps out as well. Let me know what you think of Bank of America. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have stocks that you want me to cover in the Stock Pick of the Day series, go ahead and drop those down below. I'll try to work them in on a day they pull back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. Have a good one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money and should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.